Hi, I'm John Fitzgerald from Custodian Wealth Builders. Well, it's a brand new financial new year. And I always like to start the new year resetting, looking forward and also looking backwards. Looking backwards, the last 12 months has been a 12 months of change and often turmoil. Change being that we've had a change of government, change of legislation in so many areas. We've had change in demographics and we've had a big change on the stock market. Stock market losing nearly 15% this year. Now that's as opposed to the residential market, which actually gained 12%. So property prices in Australia for this financial year, or for the last financial year, went up 12%. What's actually happening if the stock market's crashing and the residential market is actually continuing to go up, and why is that happening? Well, we asked the experts about that, and at our custodian conference, which we just had at the end of June 2008, we had the Michael Matusik, who runs his own economic forecasting, and the chief economist from the National Australia Bank. They differed on a number of things, but agreed on some of the key criteria. The subprime crisis has certainly sucked a lot of money out of the equities market. And yes, it's affected real estate because it's made borrowing capacities and the banks limited in their ability to actually lend. So we're seeing a quietening of the property market, but we're not seeing prices decline just yet, albeit affordability is very low compared to where it was 10 years ago, 20 years ago, 30 years ago, and I'll talk on that in a minute. We're also seeing the onflow of the shortage of housing. And this is where things get really critical, because both the National Australia Bank and Matusik agreed that the key criteria for residential property was actually the amount of shortage of housing in Australia. Australia will need nearly 1 million new homes in the next 5 years. And by anyone's forecasts, we'll be lucky to produce 700,000 to 800,000 of those. That's on top of a significant shortage today. The interim forecast is that in the next 12 months, 2 years, 3 years, we will have double-digit rental growth. 12, maybe 15%. And in the last 12 months, we've actually already had double-digit rental growth. So our properties in Brisbane, rents went up by nearly 17%. In Melbourne, properties rents went up by 17, 18%. In Perth, rentals went up 10 to 12%. Now these are significant for us because they're significant for our cash flow and significant for our forward thinking. The other key criteria in looking at the subprime crisis is that going to flow into Australia? The National Australia Bank were emphatic that it is not. And the key criteria they used is the amount of defaults. The US economy and housing has defaults at nearly 16 to 18% of their mortgages. Australia has 0.3% defaults, nowhere near any alarming level. So they're key criteria for us to consider. But what is the big picture? The big picture is moving forward, the fact that Australia is sitting on all of our minerals and resources, and we have booming economies and booming and emerging economies like China and India with significant demand for our resources. On top of that, Russia and countries like Brazil are also demanding our resources, and they believe the boom could go on for perhaps another 50 to 100 years. That's how amazing things are in our generation. I've said to my staff and I've said to clients, I've never seen it like this before. I've never seen an environment like this before with such a shortage of housing compared to demand, on top of a strong growing economy, which we have in Australia, and there's no doubt that will continue, and migration. And migration is really the key point. We have nearly 200,000 migrants coming to Australia on an annual basis. We have a 38-year low in unemployment. And what that's producing is a concentrated demand for not only our resources and our jobs, but our concentrated demand for our housing. And that's particularly filtered in the capital cities, Melbourne being one of the principal recipients there. So obviously in the short term, that'll drive rental growth. But what's going to happen with interest rates? The economists that we've worked with predict that interest rates will begin to come off in 2009 and certainly by 2010. The prediction following that is that as soon as interest rates come off, there'll be a significant boom in the price of housing in Australia. What am I doing about that? I'm looking at that landscape and the landscape today, looking at the shortage of supply, knowing that that will continue and even get to crisis point in 2009, 2010. And I'm entering in the market. I'm buying in Brisbane, Melbourne, even looking again at Perth, be looking again at Sydney and perhaps even Adelaide. But I'm not buying at prices close to the median house price. The median house price, whilst it's holding its own, I'm actually buying under the median house price. 10, 15, sometimes 20, 25% under the median house price in those areas. And that's where we're directing custodians to go. Because the key for us will be to obtain a 4.5%, maybe 5% rental return now, increasing to 6 or 7% in the next 2-3 years. And that'll be important for future cash flow. And as interest rates continue to trend down, those properties that we're buying at a discount to the median house price, still meeting our location criteria, they will trend up to bridge the median house price or even surpass the median house price as that escalates. And that's our key criteria looking for growth. Remember, we only have a window of time. Booms follow particular cycles. So in the late 60s, there was a boom that ran through to the early 70s. In the late 70s, there was a boom that ran through to the early 80s. In the late 80s, there was a boom that ran through to the early 90s. In the late 90s, you'll recall, there was a boom that ran through to early 2002, in fact, September 2003. And now, 2009, 2010, economists are forecasting another boom, which will run through to perhaps 2012, 2013. We want to be right at the forefront of that with a portfolio of properties that can compound growth. And that's where taking action now is going to be so important. So I wanted to touch base with you now and remind you that whatever action you take in this half of 2008 will only bear fruit, that is the finished product, sometime in 2009. Remember those lead times. And it's important to remember those lead times because we only have a window of time to build wealth. We want to make as much of this boom as we possibly can. Taking action now. Taking action remembering the fruits of migration, low unemployment, and those interest rates coming off, and of course, rental rises. Thank you for listening to me.